It's a bull. Good morning. Hey, what's up? This is Brian Kuzma, or should I say good afternoon. Got this video out a little late today. This is Brian Kuzma with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Man, only a couple days for the new year to start. This one went by pretty fast. Got the local Deerfield Beach underwater live cam up. You can watch this yourself on YouTube under Live Deerfield Beach, Florida underwater cam. Kind of quiet today. Where'd everybody go? I think everyone's relaxing. Same thing here in the store, kind of a little bit quieter than normal. I think everyone's kind of winding down and getting ready for the new year, or at least that's the way it seems right now. Kind of a vacation week, I guess. Well, let's take a look at, there's my mantra, there's my theme. Think for yourself and question authority. We won't stay here too long, but of course, I think this is the theme of next year, the thing that we need to teach the people around us that have forgotten, and teach the young folks that they need to think for themselves and question authority. And as one of my commenters said as well, question ourselves. That's really an important thing we should do on a daily basis anyway. Let's take a look at spot prices here. I'm really surprised we haven't seen any kind of smackdown. I went to look and see if the markets are open tomorrow, and I don't think they are. I think the markets are actually closed tomorrow for gold and silver. I went to look at COMEX, but I couldn't quite make sure what their site said. But no less, I think the markets are closed, and if they're open tomorrow, probably for a half day at most. Let's take a look at spot prices. Oh, before I get there too, a couple interesting things we're going to talk about today after we get through spots and the 24-hour charts here. I want to talk about an article here that was written by, where is it right there? Authored by the Epoch Times. And we've been talking about how people say that, well, if the Fed raises rates, that the price of gold is going to go up substantially. But, give me 1 second, let me shut that phone down, because they won't pick it up on the first ring there. And there's always been that common narrative with the corporate media that higher rates would cause gold prices to come down, or higher, the dollar, an improvement in the dollar would, which is total bullshit anyway. That's just a stupid narrative that someone painted a long time ago. It's not even true anymore. And we're also going to quickly talk about the potentiality of maybe Bank of America, but Bank of America could have some huge issues with a giant short position that they have, and we'll get to that in a little bit as well. I think you're going to find that interesting. I did, actually, and courtesy of Ted Butler and Butler Research. Well, let's take a look at spot prices while we're here. A low of $17.97. She's hanging in the $18 range. It looks like we may. Again, I got to look and see if the markets are open tomorrow. We may end up seeing gold close above 1,800 for the year, and silver possibly above that 23 mark. Still tough to tell right now. The rest of the day, I think we're going to hang this above 18, and I think silver's going to hang above 23, and platinum just seems like it's going to chug in that area for a little while. But tough to say again what's going to happen tomorrow. Again, is the markets open tomorrow? Let's take a look and see. I completely am not sure. COMEX gold market holiday hours. 2021. Let's see if we can kind of pull that up. Trading. Yeah, it looks like. Now make sense of this, folks, if you can. Holiday 2021's New Year's Day. That'd be New Year's Day, not New Year's Eve. New Year's Day is January observed. Give me 1 second here. Let the ambulance go by. It's not for me, thankfully. 01 New Year Day days open. It says Friday open. That doesn't make sense to me. Open 10 a.m. to 5 p.m. Evening session is closed, which means that the Globex market's closed. I think it's safe to say markets are open. Is that what you're reading there as well, folks? Well, I'll let you know tomorrow. I didn't plan on doing a report tomorrow if it's closed, so if the market's closed tomorrow, I will. I won't be doing a report, but if it's open, I will be. Let's take a look at the silver markets right here and see what's going on. 22.63. Boy, I wonder where that happened. That was probably last night or yesterday or something. And a high of 23.13. About a 25-cent move there. Currently sitting at 23.10. I'm curious to see if we close again above this $23 mark. And if markets are open, let's see what happens tomorrow. And again, if gold closes above that 18 mark and silver closes above 23, it seems somewhat promising. However, you can never tell. Platinum at 969 right now, a low of 959, a high of 974. And let's kind of just look at the 24-hour charts real quick here. Here's the 24-hour charts in gold. Here is was red last night's close. Looks like yesterday is when we kind of seen that monkey hammer in the sub 18 mark. It's kind of drifted sideways the whole rest of the day through the New York COMEX markets, sideways for the rest of the afternoon after the morning monkey hammering, and into Hong Kong in the evening markets, where it just kind of again drifted sideways. It looks like London, during London hours, it looks like the market kind of drifted upwards a little bit, and New York as well. So COMEX kind of a little bump down and a little bump up. So most of the action occurring in the overnight markets and this morning in New York. Probably the same thing with, let's see, take a look at the silver market here, 24-hour chart. And there we are. Here's us right here in black. Yeah, it looks like, again, last night's markets would have been orange. Yesterday, there's your monkey hammering, and then markets kind of drifted sideways all day long until the evening markets, again, in Hong Kong, Australia, or wherever the hell that's trading. Looks like London markets this morning kind of took a dump. I suspect that's, oh, I'm sorry, black. I'm sorry, the black mark. Here's where we reopened, drifted sideways in the evening markets and in the London market, and then again, most of the action occurring today in New York market, the morning to about noontime, it looks like. Let's see where it goes from here. Again, if markets are open tomorrow, I think, we'll see how they close for the year end. Well, doesn't matter anyway. I think we're going to close close to these marks, both in gold and silver tomorrow, even if it's a little bit under 18 or a little bit over. Same thing with silver. I don't think we're going to see any dramatic action either way. But remember, 18 is a psychological mark. So, if they can bounce it down below 18, that's, it's, again, psychological level. Same thing with silver, get it below 23. That's psychological level, but it's really meaningless in the medium long term and provides us a good opportunity to buy the dips in physical. Well, let's take a look at Market Watch real quick. I'm just kind of curious with the stock market. This is kind of new for me. I don't really follow equities or anything like that, but I suspect I should. And as you know, I've opened up a faux trading account. This is not a real trading account, folks, and whatever you do, don't take my advice. Again, my advice when it comes to precious metals is really, it's not so much advice, I'm just sharing my experience. I've been doing this since 1977, second generation dealer in precious metals and rare coins, both in the wholesale and the retail market. So I know my stuff pretty well. And I want to try to pass that along to you folks. Again, I don't want to, it's not advice, not telling you what to buy, just sharing my knowledge, okay? But when it comes to stocks and bonds, I really have zero knowledge, so don't even consider listening to, really. And actually, I'm having fun with this because I'm thinking that once the stock market tanks, and chances are gold and silver will kind of rise up. I'm gonna diversify and get back. Remember what they said, the best time to buy is when there's blood in the streets. So there's my faux portfolio of some things. But you know what? We'll go over this next week. I'm gonna pick a day or two every week and just kind of talk about my picks in this particular market. And again, this is a precious metal and rare precious metal show that I'm a rare coin dealer. I don't talk about rare coins. I talk about precious metals, and what am I doing? I'm talking about stocks and bonds. However, I guess the point of that is being diversified as well. Speaking of diversified, I'm really not in this market at all, but it kind of looks like it's kind of been sideways for Bitcoin as well for quite about at least a week or more. Look at that spike downward. Again, my opinion on Bitcoin. I'm not going to sit here and talk about it for the 100th time. Let's move into the article that I did want to discuss. This is by Andrew Moran via the Epoch Times. Typical. I like the Epoch Times too. I like reading some of their stuff. I think they're outside the box. They're not your typical single corporate media narrative that you read. But they do have their faults, like all big publications and media sources. The writer of this right here, I don't think he knows much what he's talking about, Andrew Moran, because down here he talks about will gold glitter in 2022. Gold did not shine in 2021 as a yellow metal, slumped about 5%, finding support around the $1,800 per ounce. Okay. Despite inflation surging to a 39-year high, gold prices fell on strength in the U.S. dollar and rebounding economy and expectations for monetary policy normalization. Well, I don't know how much of that's true. Gold prices fell on strength in the U.S. dollar. Yeah, there was strength in the U.S. dollar, but you know what? If we take a look at chart here, we'll see that. Where's that chart? Gold prices versus U.S. dollar. Gold kind of has been following a stronger dollar. Take a look at this: stronger dollar, stronger gold prices as well. So, I'm not quite sure what they're talking about. Gold prices, again, this is a narrative, like we were talking about earlier. How they say that, well, if the Fed raises, interest rates and yields pay more, people will get out of gold. That's nonsense. That's silly, because they'd have to raise rates to some unbelievable degree, and then governments would never be able to pay back their debts. There'd be default with the U.S. government, amongst others. So they can't. They're never going to raise rates meaningful enough for people to get rid of gold. Unless they were able to raise rates so high that it was above the what is it? Above the PPI, I think, what we're looking for, or above, real rates. Again, what it would take to get actually a positive money back. Okay, and that's not happening. It's just not going to happen. Well, anyway, let me move along here. Expectation for monetary policy normalization. Although it is still considered a safe haven asset, financial experts believe that the younger generation of investors is utilizing the fool in their money, by the way, is utilizing cryptocurrencies as a store of value. In Indian wood, while gold will clearly remain an established safe haven asset in times of economic turmoil, it's clear that the younger generations, and increasingly the older ones too, are now looking to Bitcoin to serve the same purpose in the digital era. Says David Beatty, an analyst at DeVore Group. Well, he's probably involved with the Bitcoin market, and of course he would say that. But the truth of the matter is, it's mostly filled with whales right now. I think even BlackRock is involved with Bitcoin and Ethereum and these, and so is your big financial institutions. So it's mostly loaded with whales. When they talk about the younger generation getting involved with Bitcoin and such, well, yeah, the younger generation was locked down for a year or two, and a lot of them just kind of threw money into that extra money that they got, or that government stimmies they got, or whatever it may be. They were sitting home playing with Bitcoin, throwing their money in there, and of course it was going up at that point. But is it a store of wealth? No. How can you call it a store of wealth? It has no track record whatsoever. It's maybe a little over a decade, or 12 or 15 years old. I mean, come on, that's just being dishonest, saying that Bitcoin is a good store of wealth. Really? No, I don't think so. But anyways, let me move along here. I think it's a very volatile marketplace, and I'm not kind of dissing it in that way. And I think you can make money if you're on the upside and you sell, again, buy low, sell high. But a store of wealth? No, I think it's way too soon to be calling any cryptos a store of wealth. All right, let's move along here. Credit Suisse forecast the gold price will be around $1,850 in 2022, but they could tumble to $1,600 as central banks raise interest rates. There's that narrative right there, that bullshit narrative. I hope they don't pay the analyst at Credit Suisse for this information, because they're really not too smart. If they really believe that, maybe the narrative, the idea that interest rates are going up will cause some dumbasses to sell their gold because they really don't understand what's going on. But central banks raising interest rates will have no effect on the price, or should have no effect on the price of gold, other than, like I said, dumbasses selling into that lie. Let me move along here. On interest rates, the consensus view appears to be potentially multiple rate hikes by the Fed in 2022, followed by, I'm saying, multiple rate hikes. Here, first off, if they're not jawboning this time like they have for the last decade, then those multiple rate hikes are going to be freaking significant. All right, I don't know what these people that write these articles and these analysts don't get about that. All right, following the completion of its bond tapering program, but there is uncertainty in terms of how high rates could actually go given record levels of national debt. Oh, well, it's nice to hear him at least acknowledge that, stated Fahad Tariq, precious metal analyst at Swiss Financial Institution. Risks to our view include a more hawkish Fed, return to normalized inflation, substitute effect of cryptocurrencies, and lingering weakness in retail demand for gold. Well, I guess he's pointing out the potential risk, but all those are bullshit risks. First off, hawkish Fed. What does that really mean? Again, it just means that they're going to be screaming louder, jawboning louder. That's about it. And again, raising rates to what? They can't raise rates that high. They certainly can't raise rates that are going to be worthwhile for people to put money away and stay ahead of the game, So not going to happen. Return to normalized inflation. That's a possibility, but again, I don't see how, what was normalized inflation? Pre-2020, is that what they considered normalized inflation? Well, if that's the case, then that's certainly not going to stop the price of gold, because we saw the price of gold chugging up prior to 2020, okay? So another bullshit narrative. Substitution effect with cryptocurrencies. Well, I don't believe that. I believe that there is no substitution, that gold is being substituted with cryptocurrencies only by fools, okay? Listen, that's not saying that you can't make money in cryptos. I believe 100% that there's some people out there who made some serious freaking money. They're smart people. They understand how that game is played. They buy low, they sell high. However, again, that market is a lot different. It's a lot different time when they made their money than it is right now. The whales were getting in. These guys took advantage of the fact that the whales jumped in. They drove the price of cryptos way to hell up. And if you were in earlier than that, you did quite well. But I suspect a lot of those guys have taken a lot of that money out, and hopefully they put it into something that's a real storage of wealth, which is gold and silver. Again, folks, I'm not saying you can't make money with cryptocurrencies. I'm just saying it is not a legit storage of wealth, period. It is also not money, period. What it is, it's a highly volatile electronic casino to some degree, if you ask me. But again, let me move along here. And lingering weakness in the retail demand for gold. I don't see lingering weakness in the retail demand for gold. I'm in the front lines. I don't know what they're talking about. It has slowed down a little bit from where it was, but no less. It's just, I think we probably sell 10 ounces of gold for every ounce of gold we buy, for 10 ounces of gold to the public, which would be considered retail, for every ounce of gold we buy from the public, all right? And this is still continuing. So, I don't know what to say, lingering weakness in retail demand for gold. Demand for gold has been off the hook since 2020. It slows down, it goes into little peaks and valleys, but no less, the demand is still there, believe me on that. A rising rate environment is typically bearish for gold because it lifts the opportunity cost of holding non-yielding bullion. That would be true only if the yields were positive yields, okay? Well, that's only true as if inflation in total and your cost of living and everything is like 5%, and you're getting a yield of 5.5% or 6%, 0.5% up. But you're staying ahead of the game just barely at that rate. But that ain't going to happen, man. They're not going to raise rates to any meaningful level. They're going to jawbone how meaningful it is, and only the fools will part with their gold and silver. Will the crypto craze persist next year? I'm not going to get into this because I think it's going to be here for a little while. But as I said, governments and banks hate competition. They will relegate Bitcoin to a glorified money market account who is monkey hammered by the likes of BlackRock and the JPs out there and the Chases and stuff. So, and that's my opinion. Well, as I said, there's your proof right there. Gold prices and U.S. dollar correlation. Look at that. The dollar has kind of risen, and the price of gold is also going. Look at this right here. I mean, look, they're kind of going up in tandem. So, dollar strength and gold strength is what we're looking at there, which is contrary to what they actually tell you, at least the talking heads do. Well, and you can also look at this, Fed balance sheet versus the gold price right here. This is an interesting chart to me. It's look at the price of gold, and look how, let's take this is 2012. This is the peak of gold price in 2012. This chart doesn't go back, but look how the money supply and the price of gold from 2008, from the collapse, they started increasing the money supply up 2008. And as I've said continually, what our current economy is never been fixed. From this point, from 2008, it's never been fixed. All they did was they took a hemorrhaging patient, slapped on the Band-Aids or the compression packs, whatever they call them, to try to stop the bleeding, and then they're pumping. Here's your plasma. They're pumping, that blue line right there is the money supply. They're pumping the patient, the economy, with plasma, and they're doing it. In my opinion, gold takes a little while to react to this money printing that you're seeing right here, and I think we're about to see that. But man, take a look at this after 220, where they went with the Fed balance sheet. I mean, it's just insane. Tapering. What is tapering going to do? Hardly anything. It's going to take them that many years. It's going to take them 6 times as long to lay off at the rate that they're talking about. Taper. Anyways, again, just talking heads. It's just jawboning, folks. The Fed is in big trouble. The central banks are in big trouble worldwide. So the economy is in big trouble. They've never fixed anything since 2008. All they did is this blue line, injected more plasma into the patient, and even more. And they never fixed the problem. They still haven't. So we're in the greatest bubble of all time, and when it collapses, I just don't know, and I don't know what to expect. It's going to be pretty crazy, I'd imagine. Well, let's take a look at the article. Space aliens. Could gold help us find space aliens? Good article by Peter Schiff here. Talks about how much gold is used in the space program, okay, which is very true, but it also, something I didn't know, that gold, give me 1 second, is because the gold is one of the very best materials at reflecting infrared light. I didn't know that. So scientists say that it'll have 7 times the light gathering power of the Hubble telescope. So gold is used in a lot of space industry, which we're going to see grow and grow and grow, I suspect. So you're going to see more gold being ejected into space. Will you be able to ever recover that stuff? I doubt it, but no less insignificant as far as the amount that they're going to blast off into space. Hey, Bank of America, kind of a real interesting story going on here. I don't see a lot of people talking about it other than Ted Butler and a few other folks. I think it's been mentioned on the Reddit forums as well. Give me 1 second to do a quick sip of coffee. Well, Ted Butler has put the word out there, and he's mentioned last year he basically said that Bank of America has a short position of 300,000 ounces of silver. And come to find out, Ted has just recently released, by the way, if you're a silver stacker, of course you know what I'm going to say here if you've been listening to my videos, but if you're a silver stacker, you definitely need to be reading Ted Butler stuff there. The man really knows his stuff about how the manipulation game is played and who the players are. Crooked Comex that allows these big short positions to exist, and you know the only intention of these big short positions is just that, just to drive the prices down. Well, hey, I digress. We've heard this many times, but Bank of America has a, Ted mentioned last year was thinking they had a 300,000 ounces of short position, very heavily shorted than silver derivatives. Well, he just did the numbers again, and Mr. Butler believes that the Bank of America is actually shorted closer to 800,000 ounces, and they've leased some of this silver, most of this silver. So I mean, this is serious. Let's see. Silver Doctors right here. Where is? Let's see if we can read some of this. Well, here. Forgive me for putting this, but I think he's made this comment in other. This is his page subscription site, but again, I think that he mentioned this in another site that another. What the heck is it? Somebody else's site for free. You can read this. The real problem is that Bank of America is now possibly short 800 million ounces of physical silver without a chance of ever being able to pay that silver back, except at much higher prices, as it must do someday. At least that's the way Mr. Butler sees it, based upon public data that this man is brilliant at reading, and his knowledge of how nutty these precious metal loans are. Mr. Butler has lived through a couple gold markets more than I have. He's lived through the same markets, but he was an active trader in these markets back when I was just a kid selling 100-ounce silver bars. What does he say right here? Real quickly. In fact, I've been there and done that and got the T-shirt some 25 years ago. And with precious metal loans and watch gold mining companies like Barrick and Anglo Gold lose tens of billions of dollars, while silver miners like Pasminco and Apex went bankrupt, all because they ignored warnings of how dangerous and stupid was borrowing and shorting gold and silver by leasing. Well, guess what, folks? Apparently, Bank of America is sitting on an 800,000 ounce short position and leased and derivatives, all poison stuff that could really destroy Bank of America. So if you have an account with Bank of America, maybe you might want to ask them is there issues with this huge silver short position? I mean, if they lose out, is the bank going to go south? Will the government bail them out? These are all questions you'd have to ask them if they lost a huge amount of money on this silver short position they have. But no less, very interesting stuff. And we could see this play out in a very bad way for Bank of America. Possible, again. This is the word that's out there, and you're going to start probably reading more about it here upcoming. Kind of interesting, and I'm wondering if the Reddit apes are familiar with this particular article. It looks like they are. Let's take a look here. Yeah, Wall Street Silver. There you go. So Bank of America not shorted 300,000 ounces, more like 800,000. And folks, that's potentially extremely dangerous, especially Bank of America. Think about it, one of the largest banks in America. If they were to go belly up, what would happen? I don't know. Do they? You may want, again, if you're a Bank of America customer, ask them about that position. You know, write them an email or talk to your manager and say, hey, listen, I'm a little bit concerned. If this goes south on you guys and this 800,000 ounces of silver short position that you have, derivatives, and goes south, what's the likelihood that I'm going to get hurt? You know, no less. Anyway, thought you guys would like to know this. And, you know, I think we're going to see some very, very interesting things next year. I think things are going to be kind of, that's the thing with gold and silver is that, you know, it doesn't do anything. And I've been doing this since 1977. Again, second generation dealer in precious metals market. I've been following this market. I look at it every day. I see patterns, but no less. You know, folks, we're in very interesting times right now. And I believe that gold and silver are going to make some explosive move. Will it be this upcoming year? I don't know. But to God, it seems way overdue. And again, you're talking to someone, or you're listening to someone that has a lot of experience in this and has followed, 3-4 bull markets since the 70s. Well, that is really about it, folks. What me worry, that was my video from yesterday. And I'd like to give a shout out to all the Wall Street apes out there. Keep stacking, guys. And also I always say to the Wall Street silver guys and people who are buying silver, you have to watch the price of gold, all right? Because gold, wherever gold goes, silver will follow. I don't think it's ever going to be the opposite. I don't think we're ever going to see silver just dramatically move up and gold just stay the same. They usually move in tandem. And I think the ratio is, let's see what the ratio is before we go real quick here. And let's take a look. Give me 1 second. 1814.32 divided by 23.1. It looks like my Siri is not working. All right, let's try that one more time. Siri's not working. 1814.32 divided by 23.1. Current gold-silver ratio sitting at 78.54, a little bit lower. I think it was high as, 82 to 1 or 81 or something like that not too long ago. So that spread tightening up. Well, as I said, I think we're going to see some crazy stuff coming up here next year and some explosive movements in precious metals. But again, it's a wait-and-see thing. Well, if you like my videos, please make sure that you hit that like button for sure. I like that. And the dislike, who cares? No one can even see it anymore. Oh, come on, guys. You know that I'm doing a video here, and I'm not available. So make sure you hit that like button and also the subscribe button. I do appreciate that. And where do we go from here? Let me just take a look down here and see if there's any questions I can answer. I'd like to thank all of you for watching. I appreciate that. Oh, Chart Guy. Oh, Chart Guy. Let me take a look, see what Chart Guy says. What the gold to dollar correlation is telling you, contrary to common belief, is that gold can and is rising with the dollar. As something we were just talking about, folks, as shown for the past 6 years. In fact, the dollar is 35% higher from 2012 lows, which has not prevented gold from making new highs nearly simultaneously. The dollar put in its decade high at 125. I think it's sitting around 97 now. The chart is likely based on closing weekly prices where gold hit intraday high at 2,087. As to Bitcoin, too volatile for alternative money. My debit card serves me efficiently purely for speculative purposes. Note, Bitcoin is backed by Tether backed by 1/100th of the US dollar, and US dollar backed by nothing but faith, which is waning daily. Thank you, Chart Guy, and Happy New Year's to you as well. Appreciate your wisdom on charts and your opinion on where we're going. I think we concur in many ways. Where else? And again, thanks for watching. I really appreciate it as well, and your comments mostly. Acacia, yeah, we disagree with this, but you know what? I could go into a long political conversation. I wasn't too happy that Rand Paul got involved with the Republican Party, but I think his father knows that they're going to eventually, they're not his friends, but more or less, a lot of the stuff that you mentioned in here, I could kind of counter it, but again, let's just agree to disagree. I think Rand Paul is probably the best choice we have in Washington, D.C. right now as far as any of the Republicans go. Only guy I like up there is, that I would probably vote for as a Republican, as a Libertarian. And his dad is, his dad's a hell of a guy too. No less, let me move along here and go down here. It's not a matter of blue or red. Blue is driving us over a cliff. Absolutely true. Well, I'd like to thank everybody again for watching. If this is my last video, Happy New Year. If it's not, I'll give you another one tomorrow. So, and again, I'd like to thank all of you for watching. Let me just see if there's any questions I can answer about yesterday's video. I can't go along crypto, the grid goes down. Not really. Well, I'm going to call it and call it a day right here. Get back down to work. Man, I'm overworked, understaffed. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 and 4, Mondays through Fridays. I'm a brick and mortar local South Florida dealer only, so if you want to deal with me, you do have to come to my store. Unfortunately, we do no shipping, no online sales. However, we can beat the APMEX APMEX SD and JM bullion prices for their reasonable lower price bullion products. The other high price stuff they sell there, we can usually beat the prices for, but we're not going to recommend you buy overpriced pretty stuff. You're a stacker. You are not a bird that collects shiny things for your nest. Well, anyways, that's it. Have a great day. And again, if this is my last show of the year, Happy New Year's. If it's not, I'll talk to you tomorrow. Bye now.